Today, we will talk about a very specific and step-by-step rule-based day trading and scalping strategy. Today, I'll teach you a very widely used and high-quality step-by-step trading method. Actually, this strategy suits busy people and part-time traders since it's rule-based. This trading method does not present itself all the time, but it's extremely powerful and is being used by all my friends in my personal life. You'll learn the full guide to this strategy, how to identify it, how to enter a trade, how to set the best stop losses and the targets, how to take partial profits, how to combine high and low time frames. Hello friends, this is our 8th price action video. Today I'll cover step-by-step reverse Fibonacci trading. By the way, you should be watching the videos in order, because if you miss a video, you will not understand most of the terms. I also publish study documents on Google Drive for free. Now let's see the strategy. Okay, in this really popular Fibonacci trading strategy, the first thing we should be doing is identifying the target. Yes, the target. This is why it's called reverse optimal trade entry. The most popular and possible target area is liquidity areas, which basically swing highs and lows. However, I have to admit, if you can find equal lows or highs, this strategy works even better. Let's see this example. First of all, price reacts to a giant imbalance from the 4-hour time frame. We are expecting a strong bounce from here. With the 15 minutes time frame, you can easily notice that the price reacts to it. At the bottom, we can identify the equal lows, basically a double bottom pattern. This is a great target. Equal lows and highs are natural magnets for the price. This will be my target area to draw my Fibonacci tool. The second step of this trading formula, identifying a liquidity sweep, also known as stop-loss hunt. It is actually a simple idea. You may think of it as weak breaks. Price is having a hard time making strong breaks. You'll generally see long wicks and quick reactions, because the aim of the market maker is just hunting stop losses from a previous swing point. You can notice this in this example. Are you seeing the stop hunt? Price comes here and cannot break above. Instead, it just drops a tail. This pattern is also called the swing failure pattern. Basically, the price fails to break a previous swing point strongly. This is what a liquidity hunting is, basically a stop-loss hunt. You can also notice that we also have an imbalance here. This is another great sign for us. This will be more fuel for us to short this asset. The third step is actually quite easy. You should draw your Fibonacci tool from the target to swing high after the stop hunts. As you can see in this example, drawing the Fibonacci tool from the target to swing high point. Very simple idea actually. I'm determining my optimal entry zone, which is between 0.8 and 0.7. This will be an area where I'll be looking for entries. One of the important parts of this strategy is the price should break the balance point first, which is 0.5. Since this is a rule-based trading strategy, it is important to follow the rules. I have friends that only use this trading strategy. It just requires practice. Let's get back to the example. After stop-loss hunting, price pulls back to our discount zone for a moment, which is below 0.5. As I said, it is important to follow the rules because this strategy is based on following the movements of algorithmic bots of the market makers. Finally, the entry steps. As you already know, you can use both high time frame and low time frame entries. The difference is stop losses and targets as usual. If you decide to use a high time frame entry, your stop loss should be set over the swing high point to reduce the risk of being stopped out. As the targets, I always like taking partial profits. My first profit point is generally between 0.3 and 0.2 Fibonacci levels. However, if there are significant imbalances, yes, you can also use them as your target points. The final take profit should be the liquidity weighting, or especially equal lows and equal highs. Let's continue with our example. As you notice, my stop loss is set to the high point. I tried other places for my stop loss levels, however I found it quite dangerous. You need to give your trades room to progress. My first partial target point is between 0.2 and 0.3. And actually there is an imbalance here that you cannot clearly see. My final take profit is the equal lows. It's like a price magnet, and eventually price moves there. Of course, the best entry type is in low time frames as usual. Guys, I want to repeat this. If you are being stopped out a lot, it means that you are only using high time frames. Me, my friends, and thousands of traders use price action methods around the world. Entries with low time frames and micro market structure breaks are back-tested for millions of hours. It is the most ideal entry model. Let's go in the 5 minutes time frame. There's a very clear break here, which happens around the optimal trade entry zone. And it's leaving an imbalanced area, a very big and a powerful one. As you can see, the price retraces back to the imbalance after the break and sharply drops. Since we are in the low time frames, I could set more precise stop loss and targets. My stop loss point will be at one of the previous swing high points. You can decide by yourself depending on your risk management. My target point is generally imbalances. I target imbalances for two reasons. One, it is pulling the price to balance it. Second one is it is a fuel for the reverse reaction. So it is the best area to take partial profits. Okay folks, I hope that I made this amazing day trading strategy clear enough for you. This strategy is especially useful for busy people or part-time traders. It could feel a little complicated in the beginning. However, actually, it is quite simple to adapt yourself after a regular practice. Would you like to subscribe to the channel and help me to grow it? Thank you, take care, and see you soon.